What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to react to Stephan's 80% of day traders lose money that we went over last week with Humble Trader. Let's see what happens. Check it out. All right, guys, so let's go ahead and jump into this video here. Now, as you know, last week I went over Humble Trader's reaction or like reply to Stephan talking about how 80% of traders lose money. We went over that video and I said that I wasn't too happy with the video in the sense that we didn't really hear from Graham. We just heard from Humble Trader about what Graham said, but we didn't really hear it from Graham himself. And I asked you guys if you wanted me to do a reaction video to that video from Graham. You said yes. You hit all the likes on the video and you told me to do it. So this is exactly what we're gonna do today, right? And the only thing I ask from you is if you enjoy the video and you like it, you find value, it is what you thought it would be, smash that like button for me, okay? Subscribe to the channel if you haven't, and if you have, make sure you hit that notification bell. Also comment in the comment section below and let me know what you want the next video to be. So let's go ahead and jump into this and see what Graham has to say. Those of you who don't know, Stephan is a financial channel, and this channel really just talks about financial responsibility, how to invest, stuff like that. It's a really broad channel.
Did you know that when property is sold at tax sale,
what is this guy? I've never even seen that dude. Who is that guy? What? I'd rather see the turkey guy. Put the turkey guy back on there. Skip ads.
What's up, you guys? It's Graham here. So we're gonna have a serious sit down today and have the investing talk, because I came across some very bad news today, and it's a very scary statistic. That is because according to the stock trading platform eToro, they found—
Wait a second. Have you noticed who's there? Look at who's there. Our good old boy Ross, and why I don't trade like Ross Cameron. Go check out that video if you haven't.
That a whopping 80% of day traders lose money over the course of a year, with the median loss being 36.3%. That's right, 36.3%. That's like you telling me you want to go day trade stocks, and I'm like, well, okay, that sounds great. Let me just take 36.3% of your money.
80 to 90% of traders lose money. Yes, okay. And 36% loss from their account, it's a chunk. But it's hardly blowing up your account. It's hardly losing 100%. So, I mean, Graham makes it sound like it's tremendous loss, 36%. And look, guys, I am a huge Stephan fan, major props, major respect. I watch his channel pretty much daily. So I'm a super fan. Like, honestly, I am. I'd fan out, right? Like if I met the dude, you know, we went out for lunch, Graham, if you ever want to hit it up, let me know. But 36%, come on, man, that's not really that bad when you're talking about as a day trader's day trading account. I've known day traders blowing up multiple accounts, meaning they lost 100%. So it's not that bad. Another thing, when you say that 80%, you know, not that he said it, but that article said it, right? I think realistically 90% of day traders fail, right? When you really come down to the nitty-gritty, you can find it on Investopedia. 20% of new businesses are only the ones that succeed and survive within the first 2 years. So you start a new business right now, and within the first 2 years, 80% of new businesses fail. How much different is that from new day traders failing within the first year, you know, 80% of them, like according to that article that he just read. So it's not really a huge difference between a brand new business starting out and a brand new day trader starting out. Only 20% of new businesses survive the first 2 years, okay? And 45% of all businesses fail within the first 5 years. So within the first 5 years, okay, 45% fail. That's a huge failure rate, okay? Let's get back to it here.
But seriously though, the fact that 80% of day traders have a median loss of 36.3% is absolutely unacceptable and needs to be stopped. Not to mention that 75% of day traders end up quitting within just 2 years. So,
well, of course they end up quitting within first 2 years. I mean, if you really think about it, 65% of new businesses fail within the first 10 years. That's 65%. So you're talking about only 25, percent. After that, I'm sorry, 25% of businesses are the only ones that make it to 15 years and beyond. So you start off with a bulk of new businesses to start off today, and within 15 years, only 25% of those are winners. So no surprise that you're going to have so much day traders fail. It is a business they're starting after all.
Over why investors are losing so much money, how you could prevent this from happening, and how you can actually end up making money in the long term by smashing the like button if you haven't done so already.
You should absolutely smash the like button, and that's going to help you out a lot so that you don't fail as well as a day trader. Now, he said something there that was key, how investors, if you're a day trader and you're day trading within a day trading account, that account is not an investor's account. It is a day trader's account. There is a difference.
Actually being serious, a study by MarketWatch found that over 80% of subscribers do not hit the like button. So don't just be a statistic, make sure to hit the like button.
I agree. Hit the like button, guys.
The YouTube algorithm. Thank you. Now, for those who aren't aware, day trading is a style of investing in which you buy and sell a stock.
Wrong. Day trading is not a style of investing by any means. Day trading is exactly what you just heard it is. Day trading.
Or any other investment within a short period of time, meaning you're going to be holding onto a stock for like a day or two or something.
How is holding onto a stock or day or two day trading? That would be in its essence swing trading. You're swinging the stock. You're opening a position today, Monday. You're closing it on Tuesday. That is a swing trade. Day trade by definition is opening a position, let's say in the morning, and closing it in the afternoon. At the very least, closing it at 3:59 p.m., right? Even at 4:30 and after hours. The point is you opened and closed a position within the same day. Not that you opened the position today and you closed it the next day or the day after, meaning 1 or 2 days or 2 or 3 days. That would be a swing trade. That is the very definition of a swing trade, holding onto a trade for various days or overnight.
Sell it. This type of investing relies on daily momentum and price.
It's not really a type of investment, right? You're not really investing, you're trading. So it's not so much of an investment. When we think about investments, we think about buying, something like Apple or an ETF like the SPY or VTI, stuff like that we're going to buy and we're going to invest and we're going to buy it every single month over the course of the next 20 to 30, 40, 50 years and let it grow. That's an investment.
Fluctuations in the market to make quick short-term profits, or 80% of the time you're actually just going to be losing money. And I am no exception to this experience either, because in high school I was lured into the appeal of day trading penny stocks from an ad I saw from Timothy Sykes, who turned 12. Needless to say, my high school investing experience did not end up well. I had some initial success getting very lucky on stocks I knew nothing about, but just saw people recommending them online. And then I just had a series of bad trades, one after another, where pretty soon I lost most of my money.
And that happens to a lot of new traders when they get in at specific cyclical moments in the year.
That was my first wake-up call to the experience of day trading really stocks. And it looks as though the losses from day trading have increased over the last 20 years.
And it makes total sense that you're going to see bigger losses. You have a bigger pool of traders now. Before, back in the day, you had to call, way back, you had to call in to your broker to put a trade on for you. You couldn't log online and place a trade. That didn't exist. So as time has progressed and technology has advanced and things have changed, you have a huge amount of people that had just jumped on board and using free stock trading apps like First Trade, Webull, all of these, right? Like Webull, link in the description section below. You download the app, you fund your account with $100, you're gonna get one free stock valued between $800 to $1,200. So make sure to take advantage of that, right? It's just down there in the description section. So many people have taken advantage of these things that now you have a bigger pool of day traders where you can get more information from. And of course, the bigger the pool, the more losses you're gonna see and the more losses they're gonna read.
And also fail. So why do so many people just end up losing money? Now, first, a huge reason for such large losses is really due to a lack of diversification.
No, Ram. We're talking about day traders. A day trader isn't diversified. A day trader by definition, trades intraday, meaning they open and close positions within the same day. Now, the reason most day traders fail is because of a tremendous lack of education. They're going up against the smartest people, the fastest algorithms. They're going up against like the most elite traders and algos out there in the world. And you just downloaded a Robinhood app, put $1,000 in there, $5,000, and you're just like buy market, sell market, buy market, sell market without knowing what you're doing. Day traders lose, like at the level you're seeing them lose, because they lack education.
Just consider this. A finance professor from Arizona State University analyzed the performance of over 26,000 publicly traded stocks since 1926. Stunned. He found that the average stock only traded for 7 years and then lost money, including reinvesting the...
But see, that's insignificant. That's irrelevant to a day trader, because we are day trading. That means we're taking advantage of intraday moves and intraday price action. So who cares what stock, who cares? Look, for example, DRYS. Who cares where that thing's at today? Like, it's not even on the market, right? Like, who cares? It doesn't matter. You made money or lost money in the past on it. You don't own it. You're not investing. It doesn't really matter what's going on with these companies. You're not buying VIVE for the next 30 years. You're day trading.
That most investors are overconfident about their investing ability.
Overconfidence is something that's, pretty damning to a new day trader, to any day trader, really. You get overconfident, you start oversizing. It could be really detrimental to your account,
leading them to trade more aggressively and then lose more. And overconfidence like this does a few things. Number one, it makes you more likely to jump into a trade without doing enough research. Secondly, you're more likely to stay in a trade for too long because you don't want to say to yourself that maybe you were wrong. A lot of times when it comes to this, your ego is your worst enemy, and admitting to yourself that maybe you were wrong is a very hard pill to swallow. And third, overconfidence might also mean that you're more likely to buy into a dropping stock and just continually pour money into something because you believe it's eventually just got to go back up.
And eventually they don't have to go back up. Like I said, go look at LFIN. It's not, when you're overconfident, it can cause you to take really bad trades. Just like he said, that is 100% true. Especially when you don't know what you're doing and you're overconfident on nothing, on a whim, on just actually getting lucky. So overconfidence is detrimental to any trader, and the market will humble you. It will definitely humble you.
Third, your own emotion while day trading will likely become the hardest barrier to overcome.
That's the truth. Emotions, like you've heard me say here, you've heard me tweet it out as well. Twitter in the description section below if you want to follow me there. Emotions are the biggest thing. Once you learn how to day trade, and once you learn technical analysis, which is the most widely used tool in day trading, then mastering your emotions is the next step, and that can take way longer than learning technical analysis, for example. Okay, so mastering your emotions, not giving into greed, not giving into FOMO, not giving into any of that is absolutely essential. And if you don't master your emotions, you're never going to succeed as a day trader. And you're going to be part of that statistics of 80% that lose and give up. You have to master your emotions. It doesn't mean that you're going to be a robot. Unfortunately, there will be times where your emotions will get the best of you. At that point, it's all about making those times very, very small on the grand scheme of things. Let's say you take, 500, 1,000 trades, right? If you're only like emotional, in a very small percentage of those, and then when you catch yourself, you react accordingly and properly and bounce back with your discipline, then you'll be fine, right? Because nobody's ever right 100% of the time, meaning you're going to be wrong a percentage of the time. And if your risk reward is correct, you'll be fine long term.
Making money. Like at first you're hopeful you'll make money because you see all the potential out there. You'll hear about investors out there making millions of dollars by investing in no-name penny stocks. You also hear and read about all these other people making these winning trades, and you think to yourself, well, if all of these other people are doing it and I see that it's possible, what's the...
See, hope is not a strategy. We know that. So now we've already covered emotions. We agree with Graham on that. Emotions play a huge role,
Fourth, unless you're trading with a lot of money, you're likely going to want to make riskier, more profit-driven decisions to justify the time you
YOLO Tesla calls.
spend investing. Like, just consider this. Imagine if you're investing with $5,000 and in the first year, you make a 30% return, day trading for 3 days a week for a few hours each of those days. You know, that's only a $1,500 profit at the end of the year. Broken
He looks at it like that, and it's the truth. It's only a $1,500 profit at the end of the year, 312 hours, $4.80 an hour. The way you really should look at it as a brand new day trader is, I didn't blow up my account, and I'm actually profitable. Your first 2 years of day trading should be nothing more than you learning to trade. It's basically the equivalent of putting your time in the dirt and learning the process and growing and just expanding so that in the future you're actually able to day trade good size, right? Be able to day trade for profit.
Cause people with less money to invest to go in pursuit of 1,000% profits versus 30% profits.
And that's true. This is why I hate small accounts challenges. People get these small accounts, or they start off their day trading without knowing much, and it's really small accounts, and then they try to make these accounts into these huge accounts, like they see some YouTubers that sell stuff do for marketing purposes, right? And they think that they can do it, that it's easy. If they did it, I can do it. So they get $5,000 and they try to turn that into $150,000 within 12 months, not even knowing where, like the stop limit order button is at, or how to set up hotkeys. You can't do that. You're going to fail. You're going to become part of the 80%. You gotta pace yourself. You gotta pace yourself. If you only have a $5,000 account and you made $1,500 your first year of actual live serious trading, pat yourself on the back. That's a 30% return. Good job. Imagine when you have more money, how much more money you will make if you continue with your discipline. It's a marathon. It's not a sprint.
Plan. They don't have any idea when they want to enter or exit a stock. They don't do any of their own research. These are the people who just want to get rich quick, so all they will do is jump into a trade on a whim because someone recommended it on Reddit's Wall Street Bets. And then if they...
That's exactly what we talk about on this channel all the time. Have a plan, trade your plan, entry, stop, and your exits all planned out way before you click that buy button. That's why it's so important, and not to mirror trade or not to just trade alerts randomly from anyone. I don't care who it is. I don't care if they say they've been trading for 30 years. Don't trade alerts without knowing what you're trading. Thoughts. The video Graham made is great. When he talks about greed, one thing we need to remember is that good traders aren't concerned with how much money they're going to make. Good traders, profitable traders, are concerned on each and every single trade they take how much money they can lose. All right, you always see me talking about that on my channel. When I enter a trade, I have to know how much I'm going to lose on that trade if I'm wrong. If I'm right, I'm going to get paid anyways, right? So I really need to be concerned with how much I'm risking, because my risk reward needs to be perfect. Otherwise, in the long term, you fail. So Graham's video is really good in the sense that he hits home a few good points, no doubt about that. Emotions, things like greed, FOMO, right? Lack of education, and taking trade alerts and such. But then he also talks about, how it's kind of like sketchy and dangerous because 80% fail. But then we know that most businesses fail anyways, right? Like, okay, 80% of day traders fail, meaning only 20%, win, and only 25% of new businesses make it to 15 years and beyond. So we have to keep all those things in mind when we think about this and talk about this. Graham's video is pretty good, but it still lacks a bunch of information that I hope I filled in for you. Let me know what your thoughts are, right? Just comment in the comment section below. Smash that like button for me, like I said, if you enjoyed the video, and I'll catch you on the next one.